much do you think this advanced operating environment is worth? Wait just 1 minute before you answer. Watch as Windows integrates Lotus 123 with Miami Vice. Now we can take this Ferrari and paste it right into Windows Right. Now, how much do you think Microsoft Windows is worth? Don't answer. Wait until you see Windows Right and Windows Paint, and then listen to what else you get at no extra charge. The MS-DOS Executive, an appointment calendar, a card file, a notepad, a clock, a control panel, a terminal, a print spool, or RAM driver, and, can you believe it, Reversi. That's right, all these features in Reversi, all for just, how much gas? 500? 1,000? Even more? No, it's just $99. That's right, it's $99. It's an incredible value, but it's true. It's Windows from Microsoft. Order today, P.O. Box 28.
Right. You were talking about 60 Minutes. They do the same thing.
Sure.
Harry Reasoner did a piece on some guy who was a card counter playing blackjack a couple of weeks ago, and they spent about 3 minutes in the context of the story establishing how to play blackjack.
Right.
Just the fact that you have to...
sure, go for 21.
Yeah.
Right.
Steve, when you began to develop this 5 years ago, what sort of need did you see that existed then that you felt these computers was going to fill?
Basically, are we actually doing this now?
Yeah.
Mm-hmm. The question is really, what is a personal computer, and why is it different than all the other computers that have existed throughout history?
Coming up on today's show, stocks finish lower after another hot inflation print, Fed's pushing back on rate cuts again, Supermicro falls 20%, and the story of the long-term rivalry between Bill Gates and Steve Jobs. So I was back in the late 1970s, going into the early 1980s. Steve Jobs and Bill Gates, both of similar age, were helping to revolutionize the new personal computer PC market. And so Steve Jobs built the Mac and the Mac operating system, designed as one integrated product. And it was a really step up with things with its user interface, color graphics, keyboard, and all these things. Whereas Bill Gates focused on the Windows operating software and licensed it out to all the big PC manufacturers at the time, like IBM, Toshiba, and others like that, and even copied quite a lot of things from the UI of the Mac OS, which upset Steve a lot. And so they were the two big tech rivals from the late 70s going into the 80s, and actually copied a lot of UI parts from the Mac operating system, and so created a huge amount of competition between the two. And because Bill Gates focused on just the software operating side of it, partnering with already existing manufacturers that had the economies of scale, he had the huge cost advantage and was able to sell the overall end product cheaper to the end user compared to the Mac, which was much more expensive at the time. And so here you're looking at a long-term stock price chart of Apple, which pretty much struggled after IPOing for the first 5 years, whilst Microsoft was just eating their lunch. And so the board of directors of Apple actually ousted Steve Jobs in '85. And for about 17 years, Apple's stock price went nowhere, pretty much sideways. Huge difference compared to Microsoft, which came onto the market in 1986 and just ripped up right until that tech bubble peak, absolutely dominating the tech scene, as I'm sure a lot of you remember. However, it was in 1997 that Steve Jobs came back to Apple. Straight away started working on the iMac, then the iPod, then of course the iPhone, the iPad, and so on. And so even though they had a huge rivalry that lasted years and years, they did always keep a deep respect for one another. Microsoft actually helped Apple in 1997. Steve Jobs actually got them to invest $150 million, keep them afloat, and finance their new activities. And it was actually nice to see right before Steve Jobs passed away in 2011, Apple's market cap actually overtook Microsoft. And so he was vindicated in the end. And as they say, the rest is history, with Apple having held the title of the largest company for quite a few years, only up until a few weeks ago actually, with Microsoft overtaking them once more with a market cap of $3 trillion. And so Steve Jobs' focus was on both hardware and software, which took a very long time to pan out. However, that's what still gives them the leverage to this day. Just like we see with the iPhone, the hardware manufacturer has the leverage over all the software and apps that goes on the hardware. And that's what they're doing once again by getting into the virtual reality space with their Vision Pro headset. And they're still rated as the #1 most powerful consumer brand in the world, whilst Microsoft is the #1 business user brand in the world with all of their cloud products. And Steve Ballmer, It was right there from the start as well, and took over after Bill Gates left in the early 2000s as CEO for about a decade. He still owns 4% of the company, with a value of about $120 billion, making him one of the richest men in the world. Anyway, that was a bit of a story between Apple and Microsoft over the years. Just goes to show you how hard investing is, when initially Apple's stock price went nowhere for 17 years, before becoming one of the best performing stocks of all time. Anyway, just getting on with the daily market review. But a bit of a soft finish here to end the week. More softness in mega cap tech and pretty mixed across the board. And just switching over to the weekly heat map, we can see the mega cap tech didn't actually have a good week. Alphabet's been off quite a bit here. After a few days back, we got news that OpenAI, that's the owner of ChatGPT, is developing a web search model to compete with Google, which should be some pretty formidable competition. And so Alphabet's already been kind of underperforming. I think the market's been worried about that for a little while now. Still had NVDA eking out a slight gain. We're going to hear earnings from them after Wednesday. And it was pretty checkered across the board, looking throughout all other sectors. Did see a couple of the big banks pop up, led by Wells Fargo. And just looking at the weekly chart, S&P 500, we just put in our second green candle over the last 16 weeks. Even though we had a bit of improvement in breadth, just looking at the equal weight S&P, that actually broke out. Nasdaq put in a red candle, and there's the Russell 2000 just coming up to prior resistance. VIX actually finished Friday higher for a change, a bit above 14. We got quite a good pop-up in yields today. After they pulled back yesterday, after those softer than expected retail sales, we got some hot inflation data today. PPI coming in higher than expected, and that helped to get inflation expectations breaking out higher again today. But the big one today is Supermicro Computer. And it's a story as old as time. We see it time and time again. Nothing changes people's opinions and perceptions like price. Even the most highly trained people on Wall Street. We saw that yesterday with Bank of America initiating a buy on Supermicro Computer, giving it a price target of 1040. And how poetic of the market for the next day just to slam it down 20% to $800. Unfortunately, that new buy target probably got a lot of people buying above $1,000 a share this morning, only to finish the day down 20%. Looks like it may have popped. Just got this epic bearish engulfing candle here. And there's a look at the 5-minute chart. We gapped up, getting up to 1077 in early morning trading before it absolutely just fell over, consolidated through lunch, then fell over again in the afternoon into the close. And so that was pretty quick. Normally what you can get with these big melt-ups is a big doji candle before we get that big kind of down day on really heavy volume finishing on the lows, which it looks like we may have already got here. Massive 33 million shares traded, finishing on the lows. And so I'd say that's probably it. We've probably seen the high there at 1077. We may come back up and retrace, retest, check back before it falls over again. And you want to look at this level here. When it makes its first low, retrace. Once it takes out that swing low, then it's pretty much all said and done. And so even though we've got NVIDIA earnings on Wednesday after close, looking at that price action today in Supermicro, we may have already seen a bit of a short-term top before NVIDIA comes out with earnings. And it's just going to be really interesting to see how the market reacts to NVIDIA. No doubt they're going to blow out on numbers. Everything's going to sound great. But the stock's already up almost 50% year to date. So there's a huge amount of expectation and long money into this thing. Not to mention its trading volumes are just off the charts for a stock of its size. Coming in second again today for the most liquid common stock, 26.8 billion shares traded. And same with options volume. Coming in at 1.34 billion call options traded. But this time there was quite a lot more puts. It wasn't multiples. A lot of people buying puts there today. And it was a busy day in the options market. 48.7 million contracts traded. Once again, huge lopsided. 59% calls, 64% expiring in the next 5 days. So looking at this price pattern, anything's technically possible in the market, but I'd say it's unlikely we go back up and take out new highs after having a huge down day like this. And just going out to a weekly chart, look at that huge shooting star candlestick pattern. Formations like that can typically mark a top, and this thing's got so much hot air in it, it's possible we see $500 a share over the next week or two, which could really cool things down in the market. And just looking at some of my pairs trades I'm in and watching, I didn't make as much profit on my Coinbase call options that I'd hoped. However, some of my other pairs are looking pretty good here, like my momentum one that I added yesterday, put in a huge bullish engulfing candle today on big volume. Got some others starting to climb back like the materials. Still got the industrials one diverging a little. Bit of a pop back in the multi-factor ETFs. Small cap ones just kind of sitting there. And I've got a few others I'm watching here, like another materials one. 2 real estate ETFs. Long-term treasuries versus emerging market bonds. And an interesting one I'm watching is the semiconductor ETF versus the tech sector ETF. Pretty stretched here. We are getting some of my reversal signals. I can see we're a bit over 7% above the 50-day VWAP, which is pretty much a yearly extreme. And so if today's price action in Supermicro Computer was kind of marking a bit of a top in this latest kind of parabolic little bubble we've got, then there's some creative ways to play it other than super microcomputer, which is pretty difficult in the options market since we've got such negative skews. Other interesting things you can do with options trades and pairs like this, and can be a good way to take some risk out of the portfolio by betting on the relationship of two similar ETFs instead of the overall market. And so I thought I'd do something a bit different today. Instead of talking about my course, which I'm sure some of you guys are sick of hearing about, and at the end of the day, it doesn't really bother me whether you buy it or not, doesn't have much of a change on my life. I just want to share my knowledge with those who want to learn more. And so that's exactly what I thought I'd do today by letting you guys watch one module of my online course, free of charge for the next 2 days only, and that's Module 8, Technical Analysis and Charting. And that's a 48-minute video in which I give you a full background of technical analysis, how it came about from Japanese rice traders in the 1700s, who even back then figured out it wasn't just supply and demand affecting prices, but rather the emotions of crowds. And so they came up with the candlestick as a way to measure price action and look for patterns in the charts of commodity markets. And the Japanese have done a lot for the development in the field of technical analysis, not just candlesticks. A lot of good indicators like Ichimoku, Renko charts, and Heikin Ashi, just to name a few. Also teach you the basic principles of technical analysis and other key persons and points in time when technical analysis really advanced, all the way through to modern times and into the tools that we use today. And so I explain how to properly draw things like support and resistance box and other things like that. So if you're interested in watching Module 8 from my course for free, I'm only going to keep this video up for the last 2 days of my course sale. And you can head on over to my website, clickcapital.io/chartist to watch this video now. And so regardless whether you get my course or not, I think you'll find a lot of value by learning the timeless principles of technical analysis and how to analyze price action the right way. And so just moving on with a daily market review, we've got wholesale prices posting the biggest increase in 5 months, showing the inflation fight is not over. And that complicates matters for the Fed, to say the least. Not only that, we've got consumer sentiment rising to a 31-month high as well, showing the consumer's still out there and spending. Not as much as the government though. And that's why we've got Fed's Raphael Bostic pushing back again on the market, saying investors are going to have to wait for interest rate cuts. Hold your horses, don't get so excited. So it's no surprise we've got Treasury yields ripping higher again today, and quite the about face in markets after getting super excited about rate cuts, which the bond market has already clearly started repricing over the last couple of weeks, bouncing up. And if I just invert this chart for a second, and then overlay the S&P 500. See, there's a bit of correlation there between the inverted 2-year bond yield and the S&P 500. And the point is the bond market started repricing the fact the Fed's not going to be cutting rates anytime soon, but the stock market has not. There's a bit of divergence there right now. And so we shouldn't be surprised to see a bit of a pullback in the stock market over the next week or two, especially considering we just hit that big psychological 5,000 mark on the S&P and the price action we got in super microcomputer today, which you could think of as the pointy end of risk sentiment in the market at the moment. Not to mention we've got crude oil ticking higher as well, which is going to be adding to the inflation pressures in the coming months. And what an interesting global macro backdrop we've got at the moment. US economy is holding up pretty good, as it has done separately from the rest of the global economy over the last year or so. We've got some of the largest economies in the world, like the UK and Japan, currently in technical recessions. And so one of the themes this year could be, is the US going to catch up with the rest of the world and their weakness? Or is the rest of the world going to catch up with the US? And what's really helping keep America separate from the rest of the global economy is its tech dominance. Without a doubt, America has got the stronghold on the tech industry, and now led by AI, which we're going to get another really good look on Wednesday with NVIDIA. And with companies mentioning the term AI on earnings call more than ever at records, that's caught the eye of Wall Street's sheriff. SEC Chief Gary Gensler said investors should be aware of AI washing by companies. Going on to say companies should be clear about how they're using AI and should ask themselves basic questions, such as, if we are discussing AI in earnings calls or having extensive discussions with the board, is it potentially material? We've seen time and time again that when new technologies come along, they can create buzz from investors, as well as false claims from the Professor Hills of the day. And so you got to remember, this rally in semis over the last year and a quarter is getting a bit long in the tooth. Apart from a brief 15% pullback we saw in mid last year, semiconductor sector ETF is up a huge 148% from those October 2022 lows. And we are technically quite extended up here. And there's a look at the holdings of SMH, NVIDIA making up almost a quarter of assets, followed by Taiwan Semi, then Broadcom and AMD. So AMD's already reported a few weeks back. It's actually been consolidating since then. Taiwan Semi reported about a month ago. It's absolutely ripped up since then. And then we don't hear from Broadcom until 20 days. So either way, next week could get interesting on NVIDIA. And don't forget the market's closed on Monday to observe President's Day. And just diving back in the charts, we've got the dollar index just above 104. There's Bitcoin looking a little stretched in the short term, just under 52,000. Gold holding ground above 2,000 an ounce, and crude oil sitting pretty Now looking to eye off $80 a barrel potentially next week. Still getting a nice bounce in Chinese securities, a little bit of a pullback in clean energy, and some of these other stocks that have been on a tear lately starting to look a little exhausted and toppy here. And there's JP Morgan kind of just consolidating. Alright guys, there we are for the week. Just finishing above 5,000 S&P 500. Like I said, it's a long weekend. I've been working my guts out for the last couple of weeks, so I'm taking a few days off as well. We're going to go hike a mountain with friends, then hang out in a winery. And for those of you interested in wine, highly recommend try and find a bottle of any brand from the region I live in, Central Otago. And so you want to look for a Central Otago Pinot Noir. And due to our unique climate down here, really hot days and cool nights, and really rich soil makes for a really kind of strong, earthy and smoky flavour with a really smooth finish. And some of you may already know that Central Otago Pinot Noir, some of the most highly rated wine in the world, and you will pay a few extra bucks for it, but once you take that first sip, you'll know where your money's gone straight away. And that's the only type of wine I drink. So we'll be enjoying a few glasses of that this long weekend. Other than that, thanks for tuning in, and I'll see all you guys again Tuesday night. Cheers.